Welcome back, folks, to Investor Diaries. We received a question from one of our viewers in which we were asked to recommend three growth stocks as we are closing out this year 2020. It's been an unprecedented year for sure, and we have Nidish, our resident expert, to talk about three growth stocks. So, Nidish, without further ado, let's get right into it. Which is the first stock you're recommending, Nidish?
Yeah, thanks, Appy, for the introduction. And yes, let's get into it. So, the first stock I'd recommend is Square, ticker symbol SQ. It looks like this stock and this company is poised towards this upward trajectory in 2021 as well. We are pretty bullish on the stock. We think there is little bit more upside in the next year as well.
Okay, why do you think Square is such a big growth stock? Like, what's happened with the stock, or rather the company, over the past year, which makes it such an incredible stock to hold?
Yeah. So we'll start with a brief financial snapshot over the last 12 months. So in the last 12 months, the Square, the stock price has increased by 270% and has outperformed the benchmark by 252, which is a phenomenal run, right? This 2020 has been phenomenal for Square and for Square investors. For the 9 months that ended 30th September 2020, Square's revenues increased by 86% to 6.34 billion. The net loss increased from 1.5 million to 80.9 million. The revenues do reflect the Bitcoin revenue segment increase from 338 million to 2.82 billion, and that was something that they introduced over this year as well. So that is definitely factored into the revenue increase. And subscription and service-based revenue segment, that increased by 45% to 1.09 billion. In United States alone, the increase of the revenues have been by 89% to 6.13 billion. And then an international segment also saw a 20% increase. So that's like a brief financial snapshot of how this stock and the company has performed in the last 9 to 12 months.
Yeah, so the last 9 to 12 months have been great. The stock price has exceeded 200. In fact, it's close to 240 right now as we speak. But going into 2021, why do you think I should buy stock? Like, what are some of its growth drivers, Nidish?
Yeah, that's a great question, and this is the key part here. So Square has a phenomenal growth in 2020, but we do believe that some of those drivers would continue on to 2021. We noticed that the revenue has increased by 300% in 1 year. Again, this is including the Bitcoin sales, and we expect some of that growth to continue. And then the revenue may moderate to like 20 to 25% growth in 2022, which is the second year. Note it again, 20 to 25% growth in the software or fintech space is still phenomenal. What we are anticipating is the growth would kind of plateau in 2022. So the next year is again, there's some upside. So there is a lot of momentum on the stock, and some of these drivers would continue.
Square stock price is rising over a period of time. So, in conclusion, if there's any parting thoughts, if somebody were to ask you, okay, give me two good reasons why I should buy Square stock.
Yeah, so look, to conclude, Square is very richly valued and it is with certain justification. Today, the price is roughly around 240 US dollars with a PE ratio of 509. Now, this is astronomical valuations, but we believe the valuation is justified and there would continue to be an upside. Square is also looking to invest a lot more in the marketing spend. So a lot of these momentum has been priced in, but there is some upside in 2021 as well. And look, in the previous video, we did mention that we were hoping for a dip, and the investors could go and buy Square in that dip, but that dip has not really happened yet. So I would still say if you're bullish on the long term stock, just go and buy it. Don't wait for a dip.
Okay, so go ahead, buy the stock. It's fine. Don't look for a dip for now because nobody really knows if there's going to be a dip. Moving on, second stock. What's the reveal?
I would recommend Shopify, ticker symbol SHOP. So Shopify provides a cloud-based multi-channel commerce platform designed specifically for small and medium-sized businesses. The company offers subscription solutions and merchant solutions, and the software is used by merchants to run businesses across the sales channels, including web and mobile, physical retail locations, social media storefronts, and marketplaces. The Shopify platform provides merchants a single view of the businesses and customers across all the sales channels and enables them to manage their inventory, process order payments, orders, CRM, etc., and multiple other things. So, a small business user wanting to start off who has zero presence in online and wants to leverage some of the pre-built capabilities out there, they typically go towards Shopify.
Absolutely. In fact, the pandemic has richly accelerated digital transformation in the society that we live in. And there were lockdowns, and a lot of these mom and pop stores were forced to kind of come online. And Shopify proved to be an able partner in enabling, or rather accelerating, the digital transformation. So, Nitish, now let's come to stock price, right? Like, just like Square, Shopify, I can blame the stock for being overvalued. But what do you think are some of those growth drivers for Shopify?
So Shopify has gained a lot from working in the remote working place model. As you mentioned, a lot of businesses suddenly they posed with the question of digital transformation, and they wanted something that is quick and easy and painless to go with. Of course, they could go ahead and build the platform from ground up, but why do that when they could leverage an existing platform that is built with integrations for inventory management, customer relationship, and payments, right? Again, the revenue estimates on the street are 900 million for Q4 2020 and 3.7 billion for 2021 overall. Again, in my opinion, these estimates are conservative as the company expects slowing demand in the recovery phase of the pandemic, and they have mentioned this in the last investor call as well. We do believe that the next year the recovery phase would take longer, and the recovery phase would go on to at least Q4 of 2021 or 2022. So some of the growth drivers that they saw in 2020 would again continue in 2021, and that's why we still believe that there is still some upside. Mind you, based on the conservative estimates, that is still 32% year-on-year growth.
Wow.
So if those estimates, if we all believe that those estimates are conservative, there is a lot more upside than 32% growth.
Nitish, what are your concluding thoughts on Shopify?
Shopify, just like Square, again, Shopify is richly valued and again with certain justification, right? So I'll give you 4 points as parting thoughts. First one, there's a large market opportunity. Again, the words thrown around are total addressable market, and the total addressable market is 50 million for small and medium businesses globally. Second, Shopify will outpace market growth. So Shopify's growth was 7 times the e-commerce market overall in Q3. If we expect the growth to be the same in 2021, and at least in the beginning quarters, 7 times more than the e-commerce market speaks volumes, right? 3, Shopify is a market leader for e-commerce enablement for small and medium businesses, and it should maintain its it should maintain its position in the major international markets. 4, in my opinion, this is the only company that is now posing a challenge to Amazon. If not a challenge, it's at least giving Amazon a run for the money.
Interesting thoughts. I'd add one point before we move to the third stock. Last month, Amazon officially recognized Shopify as one of its competitors, and this is when you really begin to think, what is the penetration of Shopify in the US e-commerce business?
Right.
Anyways, we'll like to move to our final stock for this video, so which is the third stock you're talking about.
Yeah, so the third stock we want to talk about is Etsy. So I'll start a little bit about what this company is about and why we're recommending it. So Etsy is an American retailer of handmade goods, vintage items, and crafted goods. The business model is basically based on sellers listing products on the Etsy platform. And the product categories range from clothing, jewelry, craft supplies, tools, wedding accessories, clothing, etc. And Etsy's revenue is categorized as marketplace revenue, seller services, and other revenue. And the marketplace consists of a platform where sellers can list their products, and Etsy gets a share or a fee of the transaction. Personally, as a user, I was curious about Etsy. What makes Etsy stand out, and why is it so different from Amazon? Why can I not just go to Amazon and buy it? But the key thing is the marketplace is curated. So in one of the transactions, I could actually reach out to a seller and talk about customized gifts for let's say a birthday party that I want to throw or my wedding, right? So I think that is the key thing, and especially in this remote place, I see that the gifting behavior has gone up, and I think some of those growth drivers would again continue in the next year.
Etsy definitely has come up in leaps and bounds over the past year. So, in terms of say financial performance, like is it even making money? What are some of your thoughts on why this will continue to be a growth stock?
Yeah, so let's look at in the past. So in 2019, the company's gross merchandise sales or GMS grew 26% to about 5 billion, while the revenue grew 35.6% to about 818 million, more than double what it had in 2016. The adjusted EBITDA was 186.3 million, up 33.5 versus 139.5 million in 2018. So over the long term, the company is targeting the GMS growth to grow from 16 to 18%, with revenue growing at a faster rate. So the company did have a lot of debt, and as of 2020, the company's total debt was about 803 million, of which about 1 billion in cash and short-term investments. So the company has also unveiled plans of raising more cash through new debt issuance. So overall, the financial snapshot, the company is looking strong. It has a strong balance sheet.
Yeah, and although I did see the uniqueness in Etsy, but still I think that Etsy has its fair share of competition. Whether it is directly or indirectly with say Shopify or Amazon, it's another story, but competition is there. So in terms of growth drivers, how does Etsy keep innovating?
The strong growth in marketplace and services revenues, also factoring in the August 2019 acquisition of RevUp. So RevUp is again a curator of marketplace, and its focus is on music and musical instruments and accessories. So Etsy, the company, has strong leadership, and they were not scared on making acquisitions and fueling growth through inorganic means. So these projections assume more than doubling of their gross merchandise sales at the Etsy marketplace, with transaction in home related and other core categories, again fueled by the COVID-19 tailwinds. So we expect the revenue to increase nearly about 14% in 2021, and projected gross margins of about 70.8 in 2020 and 70.6 in 2021. These are pretty healthy gross margins, right?
Okay, so in conclusion, Nitish, as far as say Etsy is concerned, would you like to say something?
Yeah, so again, to conclude, this stock holds a lot of promise and potential. Again, the share price has more than tripled in 2020, but after better than expected Q3 results, that has benefited from the COVID-19 tailwinds. We think Etsy's guidance will continue Etsy's momentum will continue in the next year, especially reflecting from the Q4 or the holiday selling seasons. Etsy stands to gain a lot from those. Longer term, we think Etsy is well positioned as a prime beneficiary from the secular e-commerce growth in the US as well as international markets.
Okay, so three stocks: Square, Shopify, and Etsy. All three of them have been huge beneficiaries of the digital transformation that's accelerated over the past year. Any parting thoughts, Nitish, before we wrap?
Yeah, so the way I would look at it is Square, it's a fintech play. Shopify, it's enabler of e-commerce, and Etsy is an actual e-commerce website. So if there are folks out there looking at sector-specific exposure for growth stocks, so these are the sectors that you might want to look at. But if you have enough cash or if you have enough risk appetite, I think you should go ahead and buy all three.
Okay, so this was very insightful, Nitish, and viewers. I hope you like this content. This would be one of the final videos for this year. happy holidays, and I hope to see you in 2021. Thank you, everyone.
See you. Happy holidays and stay safe.